Buying a home can be a complicated process. I've been there before and have seen clients feeling overwhelmed and unsure if they're making the right decision. Using these steps will give you valuable strategies to help navigate your home buying journey successfully. The first step is to determine if you're financially ready to buy a home. It's a lot. So, this involves assessing your income and stability of work. Lenders will review your income, including pay stubs, W 2s, whatever you've got going on, and they're trying to evaluate your ability to afford a mortgage payment. If you're on a salary, a general rule of thumb is that around 30% of your income should be available for a mortgage payment. For hourly employees, it's important to have consistent hours if you're able to, as fluctuating hours can make it difficult for lenders to determine your pre-approval amount. Now, if it's, an hour or two here or there, that's not too bad. But if like one week you work 20 hours, the next week you work 48 hours, and so on and so forth, it can be really difficult for lenders to figure out like, okay, how much can we really have this person be pre-approved for? Work history is also significant for lenders. Most lenders prefer to see at least 2 years of gainful employment. They might ask you to explain any employment gaps, but reasonable gaps such as like maternity leave or going back to school, they're usually acceptable. In some cases, schooling can count towards your work history. Your credit score is an important factor in the home buying process also. Most lenders prefer a credit score of around 640 or higher. Higher credit scores generally result in better borrowing terms, including lower interest rates and more available programs. There's lots of variables here, so a lender will help you determine what a good credit score would be for you and your situation. Don't let the 640 scare you away, because there's people with all different kinds of credit scores that have gotten a home before. I recommend shopping around for lenders. Typically, multiple credit inquiries within a 45 period will be bundled into one inquiry, and it won't negatively impact your credit score. But make sure you do your own research on that to make sure that I'm telling you the right thing and you don't do a whole bunch of credit pulls and it messes up your credit. The second step is to calculate how much you can afford. This involves analyzing your debt to income ratio, or what's called DTI. As a general guideline, 43% is the highest DTI ratio someone can have and still get qualified for a mortgage. Ideally, lenders prefer a debt to income ratio lower than 36%, with no more than 28% of the debt going towards a mortgage payment. Of course, check with your lender, as everyone's situation is different, and this is just a very general guide. You can find some debt to income ratio calculators online, and it can help you figure out what your DTI is. The third step is having money saved up. Savings are crucial for buying a home. You'll need savings for a down payment, for closing costs, and other fees that come up during the home buying process, like the inspection. A down payment usually starts at around 3% of the purchase price. This is on the low end. Traditionally, 20% has been the number that people tried to hit as a goal for a down payment. Nowadays, this isn't as easy. Everything's so expensive. Personally, what I've been seeing a lot is about 10% being a pretty common amount to put down. Closing costs are typically around 3 to 6% of your purchase price. All of these are general estimates and could change depending on your situation and where you're located, so check with your lender and your real estate agent. It's important to have these savings ready before you start home shopping. Savings will cover expenses like lender fees, title work fees, appraisal costs, and inspection fees. There are down payment assistance programs or seller concessions where a seller contributes money on your behalf to closing. If it's a seller's market, it could be difficult to have a seller give concessions, but everyone's situation is unique. Talk with your lender to see if you qualify for any down payment assistance programs or closing cost assistance. The fourth step is to hire a real estate agent. As a general rule, it's better to have your own real estate agent than using the same agent that the seller's using. You want someone who's looking out for your best interests. You can find real estate agents through a personal recommendation from online, social media. I can find a real estate agent for you in your area. The link's in the description for that. When interviewing a real estate agent, you want to make sure they're a good fit for you. Do their work hours align with the times that you'll be looking at homes? Does their communication style work with yours? Step 5 involves getting pre-approved for a mortgage. So you'll submit your financial documents to a lender who will assess your credit worthiness, income, and expenses. Pre-approval will give you a clear idea of the loan amount you can qualify for, allowing you to shop for homes within your budget. It's important to get a pre-approval before you start your home search, because I found that by the time you're able to get pre-approved, then the home that you wanted to make an offer on already has an accepted offer. Earlier you did your budget, so you should have a good idea of how much you want to spend on a property each month. Make sure the amount that you were approved for your mortgage aligns with what your budget is. A lot of times you'll be pre-approved for an amount that is higher than what you actually want to spend monthly. Step 6 is to start house hunting. That's the fun part, right? So work closely with your real estate agent to identify your preferences, like the location, size of the home, whether it's square footage or amount of rooms, any amenities that you're looking for. Are you looking for a pool? Do you want an open floor plan? I think it's also helpful, after you tell your real estate agent everything that you're looking for and what price range, ask your agent, is this reasonable? In my area, inventory can be pretty tight. So if someone is looking for something very specific, it might take a little while until a property that comes on the market that matches their criteria. When looking at properties, it's important to look at all the details. When I'm looking at homes with a client, I'm looking at the flooring, the ceiling, I'm looking for any cracks or stains that could indicate a leak or water damage. You want to open up the cabinets and closets. If you're not sure if you're allowed to, just ask your real estate agent. I personally like to look at homes when it's light out. You're able to see the outside better, of course, but I also find that having natural light in the house can make it easier to see things that might be out of place. I'm trying to get a good idea of the condition of the home so we know how much we should offer on the home if the client wants to do that. And I'm also trying to see if there are any red flags like current leaks, mold, any issues that could come up in the near future. Step 7 is making an offer. Once you've found your ideal home, your real estate agent will help you draft an offer with the purchase price, contingencies, and any other additional terms. The seller can accept, reject, or negotiate the offer. When making an offer, I find it helpful for the real estate agent to do a comp or comparative market analysis. This is when your real estate agent gathers data from other homes that are similar to the one that you want to buy. They look for homes that are similar in size, style, age, and some other key factors. They see how much those homes sold for and try to figure out a range of how much the home you want to make an offer on is worth. This is different than an appraisal. Depending on the home and the current market, it can be difficult to find homes that are similar to the home that you want to make an offer on. So it's important to know that these comps are just an estimate and are used to help guide you when figuring out an offer price, and they're not an appraisal. I have a free home buying course that goes into more detail about this process and more. The link is in the description below. Step 8 is the home inspection. After the seller accepts your offer, you hire a home inspector to thoroughly examine the property for any structural, mechanical, or safety issues. The inspection report will help you make an informed decision and negotiate repairs or price adjustments if necessary. Where I am, homes are sold as is, so the seller isn't required to do repairs up to like a certain dollar amount, like in some other areas. So it's best to talk with your real estate agent to figure out the best repair negotiation strategy for your situation. Sometimes people want everything to get fixed. In a seller's market, that can be difficult, but it's certainly not impossible. I try to pinpoint the major issues with the home and things that could make it difficult for the home to appraise. We'll talk about that more later. But again, just talk with your real estate agent to figure out what is the best way to proceed after receiving that inspection report. The inspection report can give you a good idea of what kind of condition the home is in and what things you can expect in the future. Like if the roof is 15 years old, then you know you may need to replace the roof soon if it's a shingle roof. Maybe you try to negotiate the price or ask for closing costs to help offset the cost of the roof. Step 9 is securing a mortgage. Once your offer is accepted, you need to finalize your mortgage loan. When you got pre-approved, you were pre-approved with a particular lender. You're allowed to shop around and figure out the best mortgage that works for your situation. Just check with your real estate agent to see when you need to have your loan application in by. In my area, it's typically 5 days. Now that you have a specific house, you'll be able to get a good estimate of what your monthly payment will be and what your closing costs will be. Make sure all of this makes sense and is within your budget before moving forward. Step 10 involves obtaining homeowners insurance. Lenders typically require you to have homeowners insurance to protect the property and their investment. Shop around for insurance quotes, compare coverage options, and secure a policy that suits your needs. In Florida, where I live, it can be really difficult to obtain homeowners insurance, so I encourage clients to start shopping for home insurance sooner than later. It can also be a good idea to show your inspection report to the home insurance company to verify that the home can be insured. I like to do this during the inspection period, so if there are any issues with the home and the home can't be insured in its current condition, we can negotiate that with the seller. This could just be a Florida thing, so check with your real estate agent to find out when the most ideal time is to get a homeowner's insurance policy. Step 11 is the appraisal. This is to verify that the purchase price matches the appraised value. This is typically required by lenders. The appraiser also observes the condition of the home to see if any repairs are necessary. It's usually bigger items like foundation issues, the roof, and sometimes like more nitpicky items like foliage touching the home depending on the kind of loan you're obtaining. A VA loan has more requirements than a conventional loan. Step 12 is the permit and municipal lien search and clearing title. This is typically done by the title company. This is to make sure that there aren't any open permits, any liens on the property, and that the title is clear and able to be transferred to the new owner. Step 13 is the survey. A survey is done on properties to make sure that there aren't any encroachment issues or land disputes. This may not be required for condos and similar style homes. Typically, your lender will require you that you have a survey done. Depending on your lender's requirements, you might be able to use a survey that the current owner has done within a particular time period. For me, it's a year where I live. It may not be a bad idea to see if your real estate agent can find out if a survey has been done recently, so you can save a few dollars if that's applicable in your area. Step 14 is the clear to close. Eventually, you'll get the exciting phone call from your lender that your loan has been approved and you've gotten the clear to close. You'll be sent a document called the Closing Disclosure or CD. This needs to be signed 3 days before closing. This can sometimes be a good indicator if you're going to close on time. If you don't get the CD until like the day before you're scheduled to close, that probably means your closing will be delayed. Step 15 is the final walkthrough. Before closing, you do a final walkthrough of the property to ensure it's in the agreed upon condition. This step allows you to confirm that the property is ready for your move-in. Now, if you asked for any repairs to be done, I would recommend you verify that those items have been repaired before you do the final walkthrough. I think it's really important to do a thorough walkthrough. Talk with your real estate agent to find out what condition you can expect the home to be in. This can vary depending on your contract. In my area, the home needs to be in the same condition when you first saw it. During the inspection, I do a very detailed walkthrough video, so we have a record of what the home looks like. This really comes in handy when we do the final walkthrough, so we can figure out if anything has changed. Step 16 is the closing. At the closing, you'll sign the final documents, including the mortgage agreement and other legal paperwork. You'll also pay any remaining closing costs. And once all the formalities are complete, you'll receive the keys to your new home and officially become a homeowner. Yay! All right, so check out this video for common home buying mistakes to avoid, or this playlist about the home buying process. If you have any real estate questions, my contact information is in the description below. Thanks for watching all the way to the end, especially if you're a subscriber.